All right, welcome back to Lunch of the Market. The announcement by Facebook today really does two things for us. One, whenever Facebook does go public, we'll want a piece of that at just about any cost as soon as we're able to. In fact, we may just take a look at Second Market, which is an online site where you can buy pre-IPO shares of companies. I haven't even looked at what Facebook's valuation is, but the current around $65 billion valuation for the company probably sounds appropriate considering that they are the greatest distribution platform known to man. Second, it's really Apple and not Netflix that should be concerned about Facebook's most recent move. The model for Facebook is rental and digital download, not streaming content. So instead of seeing Facebook as a competitor for Netflix, in which a subscription fee is charged for streaming content over the internet, Facebook has fired a shot directly across the bow of Apple's iTunes model. Apple offers content rental for all Apple devices. If you want to watch a movie on your iPhone or your iPod Touch or whatever, you can rent a movie, take it on a plane, in a car trip, whatever. In the prescribed period of time, the license expires, and then the content can no longer be accessed until you pay again for an additional license. iTunes also allows you to purchase digital downloads of movies and books and TV shows and other digital content. This particular content platform is the Apple iTunes model, not the Netflix streaming content model. It'll be interesting to see if Netflix responds at all to this move by Facebook. If anything, a serious competitor to iTunes, and Facebook's distribution makes them just that, may mean that we could see pressure on margins for Apple's iTunes business, not for Netflix's streaming business. The real response for Netflix would be go out and buy Starz or DC Comics, which is unfortunately already owned by Time Warner/Warner Brothers, and compete against companies like Disney toe-to-toe on what Netflix does best, which is distribute content for a fee. So while Amazon, Facebook, and others may be dabbling in what Netflix does, it will take a full-fledged assault in order to dislodge Netflix from the top of the leaderboard in streaming content. While today's massive decline may not be time to rush in and buy the stock, long in-the-money call spreads, short put spreads, or call spread risk reversals may be just what the doctor ordered. Keep in mind that eventually serious competition will hit Netflix, and the multiple will never be what it once was. But so far, we don't think that that moment has arrived. We're rolling our Netflix 205, 200 short put spreads down and out. We're not trying to be a hero on this as the big sell-off. The trend in Netflix has certainly been to the downside since it hit the high of around 245. We will keep the 200, 195 short put spreads and the 190, 185 short put spreads at least probably into next week before we make a final decision. Akamai and Netflix have both been ugly for us this month, to be sure. Look, we don't have a crystal ball to see these moves ahead of time. Otherwise, we certainly wouldn't have had the short positions we did. But it's nice to know that Karen Feinerman, on last night's Fast Money, said the Akamai story hasn't been broken and the stock is getting extremely attractive for her at current prices. April may finally spell the bottom for this battered name if we're right, and certainly if Karen's right. It's almost time to see the fruits of our labor. Next week is options expiration. So we'll let theta and volatility do their job and erode the prices of those other options that were short. Look, the way the market is trading right now, if you get up into the 80 or 90th percentile on profit on short put spreads, it's probably best to take those things off, buy back any of those short side of the put spreads that you're short, and start cleaning up your book of business or your personal portfolio going into next week, because nothing in this market is a sure bet. All right, be careful at the top of the range, which is around 1330, and until you can at least buy the bottom of the range around 1304. All right, thanks. Have a great day, and we will see you tomorrow on Lunch at the Market.